Hello everyone, this is Angel Montesclaros once again from Market Insights Asia Pacific. So today we will not be having Abu, you'll be having me for the meantime. And today we're gonna discuss about basic theory of Fibonacci. So these are the things that we're gonna discuss today. Oh wait. Um, Here. So these are the things that we're gonna discuss for today. So this is all about Fibonacci retracement and extension. So we're gonna discuss the definition, the origin of the technical indicator, how do we compute the formula, retracement versus extension, and how do we use Fibonacci retracement and extension, limitations, and of course how to draw our Fibonacci retracement and extension. So without further ado, let's begin. So Fibonacci retracements or levels are stemming from the Fibonacci sequence. So this is actually a mathematical formula whose ratios provide price levels to which markets tends to retrace a portion of a move before a trend continues in the original direction. So from the word retracement. These are the levels at which the prices retrace the levels or they retrace the price before they go to their original direction. So these are the price level where the price tends to go back or that tends to reach first before going upward or downward depending on the direction of the market for that time frame. Now, each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. The retracement concept, so this is a basic concept, all right, is used in many indicators such as the zero levels, the Garty patterns, the Elliott wave theory, and many more. And after a significant movement in price, be it up or down, the new support resistance levels are often at these lines. So this is a very basic indicator that is a foundation for many indicators and many advanced indicators. So if you wanted to learn more about the Elliott wave, the Garty patterns, knowing Fibonacci level, knowing how the Fibonacci retracement and extension works would actually help you a lot in knowing these advanced technical indicators. So the origin, this is a very old formula actually. It was named after the Italian mathematician Leonardo Pisano Bigoya. I'm not sure if that's the right pronunciation, but he's famously known as Leonardo Fibonacci. That one I'm sure is the right pronunciation. However, Fibonacci did not actually create the Fibonacci sequence. Instead, he introduced these numbers to Western Europe after learning them from Indian merchants. Fibonacci retracement levels were formulated in ancient India between 450 to 200 BCE. So this is a very old formula. And we're not even born. All right. So again, these numbers or this sequence is not originally from Fibonacci himself. He got or he learned it from India. Most notably, Indian mathematician Akarya Virahanka is known to develop Fibonacci numbers and the method of their sequencing around 600 AD. Following Virahanka's discovery, other subsequent generations of Indian mathematicians reference the number and method. So this is a very old 200 BC. So this is actually 200 years before Christ was even born. That's how old is this. Calculation. So how do we calculate the Fibonacci sequence? So as discussed earlier, there is nothing to calculate when it comes to Fibonacci retracement. These are simply percentage of what price range is chosen. However, the origin of the Fibonacci number is fascinating. They are based on something called the golden ratio. Right. So let's focus on this picture here. This is an easier way to explain what a golden ratio is. I'm not a math fan. I'm not a math genius either, but this is the easiest way for me to explain what the golden ratio is. So, the basic idea is that two circles will form a rectangle, two rectangles will form a square. Two square will form a rectangle, two rectangles will form a square, and so on and so forth until it goes in a very big spiral like this. So 1 plus 1 is equals to 2, and then 2 plus 3 is equals to 5, 5 plus 8 is equals to 13, and so on. And it will spiral into a very huge numbers, bigger numbers. That's how the number sequence is. This is actually the Fibonacci sequence. All right, now how do we find Fibonacci? And actually, Fibonacci has been observed in many things that naturally occurs in our lives. So the number of petals for flowers, even this one and this one, the number of cactuses here, even storm and galaxy, they all follow the form of Fibonacci. But this is actually the part where it involves in trading. So Fibonacci sequence, we do not use that in trading. However, what we do use is the Fibonacci levels or the percentage. So how did we came up with the percentage or the numbers that we use in Fibonacci? So these numbers here, the 0, let me show you, 0, 1, 2, 3, 5, these are the Fibonacci number sequence. So 0 plus 1 is equals to 1, 1 plus 2 is equals to 3, 3 plus 5 is equals to 8, and then 8 plus 13, 21, and so on and so forth until it go endlessly there. Now, 1.618 is actually divide one number. Why do it keeps on going back? Divide one number in the series by the number that precedes it. Therefore, 1 divided by 1, 1 divided by 1 is equals to 1. 2 divided by 1 is equals to 2. 3 divided by 2 is equals to 1.5. And then, the first few numbers, it doesn't mean something, but consistently after here, everything else is the same. It's gonna give you 1.618. Now, how did we came up with 0.618? Divide one number in the series by the number that follows it. So right after. So here, 1 divided by 1 is equals to 1. 1 divided by 2 is equals to 0.5. 3 divided by 5, 0.6. Until we're gonna come up with over here, 21 divided by 34 is equals to 0.168. And then everything else will consistently give you 0.618. That's 61.8 over there. Next. Sorry. 38.2 comes from divide a number in the series by the number located 2 spots to the right. Therefore, 1 divided by 2 is equals to 0.5. 1 divided by 3 is equals to 0.33. 2 divided by 5 here, it's going to give you 0.4 until it goes consistently here over here, where it's going to give you consistently 1. Hey, this is the wrong picture. Sorry. This shouldn't be the picture over here. This, wait. Here, sorry. 3.38.2 will give you the number located 2 spots on the right. Sorry, forget about the one earlier. This is the right slide. So 1 divided by 2, two spots on the right. So 1 divided by 2 is equals to 0.5. 1 divided by 3 is equals to 0.33. And then first few numbers, just like the previous examples, are not consistent. But here, we're gonna get consistently 13 divided by 34. From there on, we're gonna get consistently 0.382. And then lastly, the last Fibonacci number, which is 23.6, is divide a number in the series by the number located 3 spots to the right. So 1 divided by 1, 2, 3. 1 divided by 3, it's gonna give us 0.33. 2 divided by 8, it's going to give us 0.2. And then, moving forward, the first few examples again are inconsistent, but starting from here, it's going to give us consistently 23.6. Now, as I mentioned earlier, 23.6, 38.2, 61.8, and 1.618 are the only Fibonacci percentage. But even though 50% is not officially a Fibonacci number, we still use it as a respect. So this is how Fibonacci number look like on our charts. Here. I'm gonna show you earlier how to plot these things, but let's move on to the next slide. Right. Actually, the complete name for this is when we go to technical analysis, the complete name is actually Fibonacci retracement and extension. There is a part where the extension shows and there is a part where the retracement shows, right? So this is the same picture earlier on the previous slides. I just put different colors on different sections. The yellow one over here, these are the area for the retracement. So from 0 to 100%, those areas are showing us the retracement levels. Whereas 100 to 161.8 is showing us the extension levels. So again, retracement are the levels where the prices tend to pull back first before they go to their prior trend. So if we, for example, on this example, this is an uptrend. So it went back first on these levels before it resumes going upwards. It didn't go here because it's an uptrend. But we will be looking at more examples later on. Now, how do we use Fibonacci retracement? So these levels actually shows us key areas where a stock or a financial product may reverse or stall. Now, Fibonacci retracement can be used to place entry orders, determine stop loss levels, or set your price targets or take profit. So, for example, this is the price levels for a retracement. And let's assume that the price is upwards or uptrend. If this is your Fibonacci level, if the price crosses below 100, that means that the signal or the trend has reversed, completely reversed. If it goes up and go down all the way to 61.8, then the trend has been weak. If it goes up and retrace up to 50%, that's the normal trend. Actually, 50% for me is the lowest price an uptrend should go. I don't really buy at 61.8 simply because it has already retraced below the 50%. If it goes up and retrace to 38.2%, that is signaling that the trend is strong. So where are the price levels that for me is ideal to buy or to enter once again if the price is on an uptrend? So it goes up. For me, the best price to enter is 38.2 and 50% because it is signifying that the trend or the uptrend on this case is still intact and the trend is actually strong. Although you could technically still buy at 61.8, I do not prefer buying at 61.8 level because it shows weak trend. And a little bit further down, it could actually show me reversing of the trend already. So I don't actually like to buy trends that are weak. It's not gonna give me a very good profitability for this one. Although if the trend will be still upwards, 61.8 is actually the price area where it's going to give you a bigger profit for here because it already shed a lot, so it has more space to go up, but it's not the safest to buy. Still, the safest to buy is around 38.2 or 50%. So what are the pros or what are the positive things that Fibonacci retracement and extension offers to us? It is the levels that it provides are static prices. It doesn't change. Once you plot it, it's there. The price will just move and it's gonna take a while before you need to adjust your Fibonacci retracement and extension. This allows beginners to easily identify support resistance based on whatever time frame they wanted to trade. And many traders actually put Fibonacci levels into consideration when trading. Again, this is a popular indicator. So since a lot of people are respecting it, then many people would be watching these levels as well. What are the cons when using a Fibonacci retracement? Unlike other indicators who uses real market data to calculate their values, Fibonacci retracement and extension have almost no relation to the actual market except for the swing high and low used to draw it. Because again, this is a static indicator, so you already place it before the price has moved, and as long as the swing high and the swing low does not change, it's pretty much it. So it does not get real-time data or real-time prices. It does not adjust to those things. The identification of swing high and low could be subjective, resulting to a different or a slightly different Fibonacci levels. This system struggles to confirm any other indicators and doesn't provide easily identifiable strong or weak signals. It has a lot of cons, to be honest. But um, again, many traders are putting this into consideration when trading. So it's better to still know it. When it comes to backtesting, there is a YouTube page named Trading Rush. He likes to backtest different kinds of technical indicators. And based on the backtesting that he did, it reveals that the Fibonacci levels have no significant impact on price movements. There are other indicators out there that has given him better outcome for backtesting rather than Fibonacci levels. So while the retracement levels indicate that the price might find support or resistance, there is no assurance the price will actually stop there. That is why other confirmation signals are used, such as price starting to bounce off on this level. And the biggest problem of all is traders struggle to know which one will be useful at any particular time. But actually, the other cons are pretty much normal on technical indicators because as mentioned, these are indicators that doesn't really hang or is not anchored towards fundamental analysis. So even though technical analysis is showing us one thing, it's still actually fundamental analysis who's gonna dictate where the price will go, whether it's up or down. But let me show you how to draw your Fibonacci retracement and extension. So basically, all you have to do is find a swing high and swing low, connect them, and automatically the system will plot your Fibonacci levels. So let me show you how it works. Right. So this is, I already have plotted my Fibonacci retracement over here. This is the example I actually showed you earlier. Let me, here. So here. There. So you could use Fibonacci retracement on any time frame, whether it be on M5 or as high as weekly chart, monthly chart, it really doesn't matter. But the thing to use it is you have to find a high and low to connect it. So let me try to delete this first and show you exactly how to place your Fibonacci retracement. If you have your Fibonacci icon over here, you could just click on that and then identify your, let's not start there first. Let me find first the swing high and low that we wanted to do. So assuming this is the low over here, and we have our high over here. So these are the swing high and low that we wanted to plot. Okay. So once we have identified the high and the low, let's click our Fibonacci retracement over here. From here, drag it all the way here up here. No, better yet, better yet, draw it backwards. Start from here all the way here. Why did I draw it on the opposite direction from right to left? Because it is an uptrend, so I want my extension to be here, above here. So let us analyze here if the Fibonacci retracement is actually done its job or not. So from here to here, these are the areas where it's supposed to what? It's supposed to stop or stall before going back to its original trend, which is uptrend. So it did not stop at 61.8, no stop as well at 50%, but notably we could see that the price stalled at 38.2 before it went up a little bit, went down again, respected the 50 level, and then went all the way up here. Now, you could see that the price broke 100 level. That means that the uptrend is strong, and where will it go? It will go here at 161.8. That's why I drew my extension on the upper part over here. So when the swing high broke in the future, I know where my resistance gonna be. Now that I have identified the support resistance levels, how do I put this on my personal trades? For example, the first one over here, you could actually put your buy somewhere here. Let me change it to a so you could see it clearly. I don't prefer to buy exactly here. I prefer to buy somewhere here. I don't want it breaking down over there, but as you can see, let me delete this first. This one. This candlestick over here closed where? Oops. It closed below the 61.8 level, meaning I shouldn't be buying on this level. The next one, it touched over here, and look, did not touch or did not even break 38.2 level. And then the candlestick over here, although there is a wick below 38.2, the closing price is still above, even above 50. So for this area, if you are able to buy around here, let's change color. Wait. Into something that is nice to see, right? So I don't recommend to buy here. That's already below the support. We shouldn't be buying there. We should only buy on this level. Or if you miss this one, there is another opportunity to buy here. But for this one, I would be a little bit hesitant if I see this because the closing price is slightly below 50. But this one is okay and this one is okay. So probably around this candlestick over here, I could buy. So let me mark the prices where I can actually buy. Here and here and here. And then another area that I could buy is actually here. Why here? Because this candlestick is where the breakout for 100 level happened. So if these are my entry areas, where are my take profit areas? Depends on you actually. But if I buy over here, of course, the most common take profit is here. I would change the color of the box for take profit. Let me put like a green one for the take profit. This is the final take profit. If you bought here or here, your take profit should be here. Again, I did not put it above the resistance. I just put my take profit slightly below the resistance. And then if this happened, if I put in another entry over here, so I did my third trade over here, my take profit should be where? My take profit should be somewhere here. There. So again, if I bought here or here, the most common or the most logical take profit is here at 139.3 level. If I made another buy over here, the logical take profit would be around 147 level over here. Now this is what time frame. This is for a daily chart. Let's find something that is not daily. Let's find a lower time frame perhaps. Still on USD JPY. Let's go on, let's say M5. This is a very versatile technical indicator actually, because you can use it on any time frame. But let me take a look first at how it looks like. So the present trend is what? The present trend for the meantime is downtrend over here. I like to zoom out a little bit so that I could see the general trend of where the prices is going. If you wanted to trade like a longer trade, probably you could go for this swing over here. Sorry. Swing low over there. And a swing high over here. But it's gonna be a longer trade. But let's check first. This is an uptrend. And as you can see, where did the price stop? Here. It respected that 23.6 Fibonacci level. Very good, huh? So, assuming that you bought over here. Let's change color. Assuming that you buy over here and the price is already where? The price is already here. Then you are already, the price is already here. So how many pips is that already? From your entry price to here, you are already profiting by 413 points or 400 points or 40 pips. Not bad, eh? But if you use this area as your take profit, as your entry level or entry area, your take profit should be slightly below the nearest resistance. Where? Here. I put in a box, not a specific line. Any reason why? Just to make sure that I could take my profit. Because if I put it exactly here, it might not be hit, especially if the spread is high on that time. Well, we cannot really compute or calculate the exact spread that would be charged to you once the price hits this level. So I like to put a range over here just so I'm sure that my take profit would come in. But if this price, well, let me reverse my Fibonacci. Here. Should there be a break on this level over here? Where should my take profit be? All right. The next area to enter should be, let's see. The next area to enter should be here, slightly above the 100 area. And if you purchase there or if you buy there, your take profit should be around here, 146.60 area over here. But if you don't have the patience to wait for a trade to go from here to there and there, then there is another option for you, which is to zoom in. If we zoom in, let me delete first the indicators and the object, and start over. Assuming that you wanted to create a faster trade, you don't want to wait for too long, then you could just take this area into consideration for our trades. You could actually take smaller ones. So for example, let me take from, so this is a downtrend, so let me take from here to here. There, right? So this is the area where I took the here, the high over here, and I took the low over here, right? So these areas are supposedly the retracement area or the price where it should go back. Did the price respected the areas? Let's test. So it went all the way up here and stopped at 38.2. It worked. And then went back, stopped at 61.8. It worked. Another touch here at 61.8. And now, after touching zero level over here, it is correcting or going down a little bit further. So what trend is this? Is supposed to be a downtrend. But the price is already here above 23.6 and below zero. So it means that the downtrend is weak. If it goes above here, then that means, sorry, that's a big one, just here. If it goes above here or it closed, the candlestick close above the zero level, then that means that the downtrend is already over. Is there any area for us to sell? You could have sold here, but this is a dangerous gamble to sell. If I were to sell, I would sell around here, below 50 area, which is the safest, or here. And my take profit would be around, sorry, here. Here. Now, let's go back to the cons that was discussed earlier. One of the cons is that traders are struggling to identify what to do once the price touches the support resistance levels, like this one. Once the price is already here, the Fibonacci retracement do not tell us if it's gonna go up beyond zero or it's gonna go back on this area here. Fibonacci retracement cannot tell us those things. What the Fibonacci areas can only tell us is that this area over here is a support resistance area. That's it. It does not tell you much whether the trend will continue or end. So if you wanted to use Fibonacci retracement and extension, it is actually the best to combine it with other indicators that could tell you direction. Because Fibonacci retracement is just all about support resistance levels. Let's do one more example. Let's try gold, which is on a low already. I have a trick that I like to do when I am trading using Fibonacci retracement. This is applicable on any time frame, right? But what I like to do is I like to zoom out and see what the recent trend is. So this is a downtrend. The recent trend right now is a downtrend. But I wanted to see how low could this go. So if I wanted to see how low can this go, I would look for the previous trend. The previous trend is actually over here. So what I can do is actually from here to, sorry, no. from here to here. There. So since the price is already in between 61.8 to 100, that means that the downtrend is still very strong. If it does break, if this breaks, let's zoom out a bit. Where is the 161.8 over here? But this is far-fetched. This is what? 1000 level. I haven't seen this for years. Assuming that it went all the way here, you could actually just go back here and find other levels. That's why I'm speaking. That's why I'm telling earlier that this is quite subjective. Because now I have adjusted it here, but the problem is if it goes beyond this area, I cannot scroll anymore. This is it. So what can I do if this is it? The chart won't extend me more older data. What you can do is actually zoom out, and here you have a support. But this is a very, very far support. So this is quite advanced, but you could do a Fibonacci within a Fibonacci. Here. I put in a Fibonacci between 100 and 161.28, and now I have a smaller Fibonacci over here. Cool, huh? I only do this trick, a Fibonacci within a Fibonacci, if I don't see any support resistance levels using other indicators, or the price is already on historical high and low, and there is no more data to back it up. Let's try to do it with USDJPY. Control. USDJPY is already on its historical high. See? So if you use other indicators or other strategies that are using past prices to determine where the next support resistance is going to be, it's hard to find the resistance because the price is there. The price is already on the high. But actually, if we use extension, then we could find where the next support resistance will be. For example, from from here to here. Perfect. See? I took the previous trend, the swing high and swing low for the previous trend, and look, once it reached 100, my take profit is done. I already made profit. It already hit 161.8 over here. That's where you use your take profit. That's one of the magic of Fibonacci retracement. Again, backtesting is not good for Fibonacci, but since a lot of people are respecting it, then you would see that the price is actually moving on this level, even though the backtesting is quite difficult for this one. Let's try to do it on another time. For example, let's do here over here. Here. No. Doesn't make any sense for here, right? How about I put it here? See? If I put it here, that means that this one is already on 161.8. How come it's showing me the same price as earlier? Well, it's because remember the computation, 1 plus 1 equals 2, and then so on. So it's gonna go spiral. So if you draw a smaller Fibonacci, it would match your bigger Fibonacci. So hence, so many strategies, so many technical indicators are stemming from the Fibonacci numbers, Fibonacci retracement levels. Do we have? I have totally forgotten. Do we have any questions? If you have any questions for the topic that I'm discussing, this is very easy topic. Please feel free to leave your comment here below. I'll try to answer it, even though the webinar is already done. Um, you could also you could also send us a private message for your inquiries. But let's try one last example. Another pair that is already on high, historical high or historical low. Let's try to go for pound USD. USD is so strong these days. Again, if we take a look at pound USD, it's already very low and no further or no lower data. So what can we do to find where the next support's gonna be? Again, Fibonacci is our friend, so Fibonacci will tell us those areas. Oops. From here, the low over here and the high over here. Somehow, the prices are respecting the area, but not so much. And the Fibonacci 161.8 is over here. It's very far, 0.96890. So if the price for pound would go down further, then it could go here. But the distance from 100 to 161.8 is very far. So for us to shorten that gap, what we can do is draw another Fibonacci from here over here. There we go. Now we have something. That's why it stopped there, because there is a 61.8 area over there. And this is showing that the downtrend for the meantime is not that strong because it's already above 50 level. Downtrend is still intact, but not that strong anymore because it's above 50. But if it goes all the way down there, then we have further supports over there. I have not received any questions. So again, if you have questions, you could post it later on. I would be ending my webinar for today. Thank you for having me. No questions, right? Let us summarize. Fibonacci retracement and extension are price levels derived from the Fibonacci numbers that are found in nature and everything from petals to the galaxy. These are numbers that we see on our nature. And when we use those Fibonacci numbers in percentage, like I showed you earlier how it's computed, we're going to get a percentage. We're going to get 23.6, 38.2, 61.8. 50 is not a Fibonacci number. We just put it there to be respected, but it's not technically a Fibonacci number. Once the price extends or breaks out of 100 or 0, then we could use the extension to find where the next support resistance is going to be. Again, Fibonacci retracement do not exactly tell us the direction of the price, but rather it tells us where the support resistance is going to be. And those support resistance are what we're going to use to identify three things: our entry prices, our take profit, and our stop loss. So since there's no more question, I would be ending this webinar. Thank you for having me and see you on the next episode. Bye-bye.